Hi guys, welcome along today. It's Lucas Rogers speaking from the Rogers Property Group. Today I'm going to be talking about this coronavirus and what sort of impact and opportunities that's bringing to the property investment market at the moment. No doubt from an economical perspective, you've all seen the impact of that at the moment. Casual employees, are losing jobs at the moment. Anybody that's working in some sort of hospitality, tourism and so on, look, it's not a great time for them at the minute. And as I said, if you're a casual and an employer can let you go without too many consequences, then they're doing that at the minute. Most full-time employees, from what I've spoken to from my clients and what I've heard speaking to most people, do still have a job. People that can't work from home or in industries that need to be shut down, well, those people are taking leave, so that might be sick leave initially, maybe long service leave and annual leave as well. So as far as I can see, I don't think job losses are huge at the minute. I think what's happening overall in the market is in Australia at the moment, from an economical perspective and a health perspective, is people are panicking. There's absolutely no doubts about that. And I think, whether you call it overreacting or not remains to be seen, but there is a lot of panicking going on at the moment. Now, I'm not an expert on the virus or health expert by any stretch of the imagination. What I can see though is that what's happening in other countries, that they are going through these lockdown periods and they are getting results. And I really think that, I'm not suggesting that this is what we do, but I feel that that's what's going to happen in Australia. It's now we're looking at it's the 26th of March today, and we're looking at probably going into lockdown, I would think personally, over the next week or so. We have Easter coming up. Generally, most businesses are shutting down through that period, so it's a fairly opportune time to shut down everybody and put in these I suppose code 3 or level 3 lockdowns where nobody can really move around. We've got our borders closed at the moment from a national perspective and also from a state perspective, so we are slowing down the movement of people. The word is, or the advice around it all is to self-isolate, which is I suppose not happening in a few areas. People aren't really taking heed of that. So I think the lockdown will come on. So I don't think that we are going to have an extended period in Australia of the virus. I think it will peak maybe in the next few weeks, and then hopefully it will slow down once we go into lockdown, if that's the case. And then what's going to happen after that? Well, the economic effects we are feeling at the moment, but the long-term economic effects we are hoping are not going to be as bad as people make out. You have to be very careful when you're listening to Facebook and different social media who really, it's just posted by people's thoughts and their feelings, and it's just really a notice board or somebody getting on a megaphone to shout out what their feelings are. Very few of the posts are factual, and a lot of it's just hearsay, and a lot of it, to be quite honest, is nonsense. People are talking, 30% unemployment, 30% drop in property prices and all that. Guys, that's just not going to happen. You're not going to see a drop of 30% in property prices at all. I've had a few clients call me and they're thinking that their strategy is going to be over the next sort of month to 6 weeks that they're going to find a distressed vendor of an investment property, and they're going to pick on them and try and get that cheap. Well, I can't really see that working at the moment. If you own an investment property which is rented out, and you are under some sort of pressure from work, well, then the bank is going to allow you to not pay interest for the next 6 months. Now, when you come out of that, let's call it interest-free period, it's not going to be a balloon payment at that period there. What they're going to do is they're going to add it on, and your weekly repayments will go up at that stage. So if you've got an investment property that's costing you $300 a week or $400 a week in interest repayments, and the property's bringing in $500 a week in rent, and now all of a sudden you don't have interest repayments, well, you'd be crazy to sell that at this particular time, because it's going to bring an extra $500 per week into your family. So you wouldn't be selling that. So I can't see any really great deals coming out of that area. I think where some action is going to be felt, and I think it's so there's going to be some good opportunities, is around the land sector, vacant blocks of land. The reason why I feel that there's going to be some good opportunities around vacant blocks of land is if they don't have a house on them, they can't produce any income. So if you've got an asset there, although it might not be costing you anything, it's not producing any income for you, you're potentially going to want to unload that asset. Now, are people going to be selling those assets at half price and all that? Answer is absolutely not. People will look at it and say, okay, well, this coronavirus might have an effect for the next 2 months at the outset. 2 months max. I don't think it's going to go on for 6 months or anything like that. People are thinking, okay, well, look, why would I discount my property by $40,000 when my holding costs are only, $10,000 a year or something like that? So you're just not going to see those huge reductions. If the virus goes on for a year, then we'll see some issues further down the track. But at the moment, I mean, it is a virus. It will pass. Even if we all caught it, it would, by Christmas time, we'd all be fine. So there is some stimulus packages, as you are no doubt aware. As we speak at the moment, the Premier of Queensland is getting onto the radio or the media and is talking about a state-run stimulus package as well. So there's a moratorium on tax payments. Companies are getting GST payments withheld. There's support for employees and so on. So I don't think things are as bad as people are making out, but everybody likes to panic. So I think this window of opportunity in regards to property investing and getting a good deal on a block of land, I would personally suggest that that's going to be open for maybe the next month, maybe 6 weeks or something like that. I think once we get past that period and some confidence gets back into the market, then I think you're going to see a lot of people, one, hanging onto their properties, and two, you're going to see a lot of buyers coming into the market. And the reason that you're going to see a lot of buyers coming into the market is it's such a prime environment to be investing in at the moment. It really is. Look at the Brisbane market at the moment. You have yields on residential investments of around about 5%. Okay, that's a very strong yield. And the reason being is Brisbane, from a housing perspective, is undersupplied across its better suburbs at the moment. So you're getting 5%. Vacancy rates are down around 1%. In some of the better suburbs, we're looking at 0.5% vacancy rate. There's literally no houses available to rent in some better suburbs. Okay, so we've got high yields. We've got exceptionally low rates. You can borrow between 2.5% and 3% at the moment, depending on whether you're an owner-occupier, investor, and so on. So rates are incredibly low. So if you're getting 5% on your investment, you're paying interest repayments at, let's say, at the high end of, say, 3%, then you're going to have a very, very strong property there to hold, not only from a capital growth perspective for the future, but also from cash flow as well. So it's a very opportune time to get into the residential property. You're going to see a lot of people who have been investing in commercial property over the last few years. Those commercial property prices have risen so strongly due to cheap money getting around that the yield versus obviously the yield on investment versus the value of that investment has dropped significantly. So with the same yield, you can buy yourself a residential investment, which is, one, much safer, two, typically provides better capital growth, and if it's giving you the same yield, then why would you go for a commercial investment at the moment? So residential property is, especially in Brisbane, is a very, very good thing to be looking at the moment. What I want to do today is to alleviate some concerns about cost of ownership and so on. And look, I'm not suggesting that everybody races out before Easter and starts buying investment properties. What I'm suggesting is get yourself into a position, start thinking about it, because before you know it, we'll be out of this virus crisis. And once we're out of this virus crisis, as I said, you're going to see the market really pick up. People are going to get into it very aggressively. So why not set yourself up, learn a little bit about the property market, learn how cash flow works, have a look at your finances, see how things are tracking in that department, and just get ready for when things are prime. We will know much more about the virus and the crisis that's going on in 2 weeks' time. I guarantee you by the end of Easter we'll know exactly what's happening, and we will have a little bit of a picture into the future to see whether there's some light at the end of this tunnel, which I'm sure that there's going to be. And when we see that light at the end of the tunnel, we get some confidence back, or even at the moment, if you're confident that your job is not going to be lost and it's very secure, then I suggest that you seriously get everything ready to be able to get started in the property market, because people are going to make a lot of money in the next 6 months. There's no doubt about that. Let's have a look at some cash flows now. So let's look at the average price property, which was, say, $600,000. Okay, if we buy a $600,000 property, let's assume that that property is new. So we'll write in there new. And the reason why I'm saying new is because we're going to count in tax deductions or depreciation deductions into that property. Okay, so our property, our interest at the moment, so our expenses, our biggest expense is always going to be our interest. Okay, our interest at, say, 5% is going to be $18,000 per annum. Okay, now cost of ownership, so our management fees, our insurances, maintenance, rates, all those sorts of things, let's round those up. They're generally about $7,500. Whoops, I was thinking rates in my head. So let's say expenses. Okay, let's say that those expenses cost us $8,000 there, rounding it up. We have total cost of ownership of $26,000 per annum. Okay, that's what it is at the moment. So our total expense line is $26,000. Now let's look at our incomings against that. So so this is the income spot. If we're getting rent of, say, rent at $550 per week. Hopefully you can read that. So if they get our rent at $550 per week, that's giving us $28,600 per year. Okay. Plus, on top of that, if we put special solar system that we offer our clients, if we put solar on the property as well, that's going to be bringing us in another $25 per week. So let's call that there $25 per week. So that's going to be bringing us in another $1,300 per year. Okay, so now what's our total income from our property? Our total income from our property is going to be $29,900 there. So what's our net figure? Okay, well, this is our expense. This is our total expense. This is our total ingoings. What's our net figure? Well, it's going to be $3,900. Okay, that's going to be $3,900 that our property at the moment, because we have our low interest rate, so interest at 3%, I should have written up there. Because we've got a low interest rate there, our property is going to be cash flow positive to the tune of around about $4,000. And that is prior to any tax deductions. If we then start to add in tax deductions into our property, typically a property is going to give us around about, let's say, on average, about $3,000 a year in tax back if we're on an income of, say, $70,000 per year, 30% tax rate. So we're going to get around $3,000 back in. So if we add it on, so plus another $3,000 there of tax back, what's going to be our net figure? Sorry guys, I've run out of room on my board. Our net figure is going to be around about $6,900. And that's the figure that we want to be looking at, okay? But what we've also got to take into account is, let's just say that we lose our job or something happens, our income slows down. What's our property actually going to cost us at the moment? Well, our property, if we buy well, is going to be positively geared. Even if we add in a few extra expenses on that, and even if it's positively geared to the tune of, you know, $2,000 a year, we've got a very good asset on our hands. What this little illustration demonstrates is that at the moment your property holdings, if you've got a good interest rate and you pick the right property, then it is a very good time to be in the market at the moment, because most property in Australia, good property, is going to be cash flow positive to you. So guys, look, don't despair in regards to property investing. Things will get better in regards to the economic outlook on things. And I would say in the next 2 to 3 weeks, we'll have a better view of how things are going. And I would say, 2 weeks after Easter, I'm hoping, crossing my fingers, it's going to be business as usual. If it's not, we're certainly going to have some confidence back. We're going to have a bit of light at the end of the tunnel. So get yourselves ready to be investing, because at that stage there's going to be a couple of good deals getting around on land, I would think. Not so much on housing for my reasons previously, because people aren't going to sell a house that has a tenant in it already, because of the fact that that's just going to be positive income for them. So guys, get in there, have a look around, get yourselves ready. And if you would like to speak to us in the office, we are working at the moment. We're also a building company, which is considered an essential service as well. So if you'd like to speak to me, we can organise an online chat, or we could organise a phone appointment, something like that. But feel free to have a chat with me. If you have any concerns about the market as well, I'd be more than happy to talk to you about those. So guys, look, thanks for listening to me. I know I've sort of waffled on a bit today, but I know that there's a few anxious people out there who'd like to hear some positive news, and I think really this is it. So with any sort of crisis, any sort of downturn, I think there's also some great opportunities as well. So be positive about that, and happy investing, guys. Thanks for listening.